What if I told you that one of the most powerful wealth-building tools in history is also, well, one of the simplest? Today, we're digging into the S&P 500, an investment that has turned pretty modest sums into absolute fortunes. And this whole story really kicks off with a truly staggering number.
Over $2 million. Just let that sink in for a second. I mean, that is a life-changing amount of money. But you know what's truly unbelievable? It's not the number itself. It's where it all came from.
And here's the kicker. That $2 million, it grew from a single $10,000 investment made way back in 1970. That's it. No frantic day trading, no chasing the next hot stock tip, just one decision, and then a whole lot of patience.
So, seriously, how on earth is that even possible? How does 10 grand magically become 2 million? Well, the answer isn't some secret trick or a complicated scheme. It's an investment engine that's been quietly humming along for decades.
Yeah, we're talking about the S&P 500. And just think about the storms it's had to weather. The dot-com bust of 2000, the huge financial crisis in 2008, a global pandemic, and yet through all of that chaos, it has consistently delivered incredible long-term growth. You can make a real case for it being history's greatest wealth machine.
Okay, so what is actually under the hood of this wealth machine? How does it all work? Let's peel back the layers and take a good look.
Don't think of it as just a list. A much better way to see it is as an all-star team. It's the 500 largest, most influential companies in the U.S. We're talking titans of industry, the big innovators, the household names, all playing on the same team inside your portfolio.
And that's the real beauty of this all-star team approach. You're not just betting on the star quarterback in the tech world. No, you're invested across the entire field, from the solid defense you get in healthcare and finance to the powerful offense from consumer goods and energy. This is what we call diversification.
Think of it like this. It's kind of like a well-balanced meal. You wouldn't want to live on just one food group, would you? Of course not. It's the same idea here. By owning a small piece of everything, if one sector has a bad year, let's say energy prices dip, the strength in another, like technology, can help balance things out. You're not just betting on one company. You're betting on the long-term health of the entire U.S. economy.
Okay, so that's the what. It's a diversified team of top-tier companies. Now, let's get to the why. What's the actual secret sauce that powers this whole thing? It really comes down to 3 secret ingredients. First, you're betting on the big picture. Just simple, long-term growth. Second, you've got that automatic diversification we just covered. And third, this is the real magic, compound interest. It's basically your money making more money, which then makes even more money. It's a snowball effect that over decades turns into an absolute avalanche of wealth.
And look, if there's one person you should probably listen to when it comes to investing, it's Warren Buffett. His advice for most people isn't some complex secret formula. It's this. He basically argues that betting on the S&P 500 is simply betting on America's best businesses to keep innovating, to keep growing, and to succeed over the long haul. And if you look at history, that has been the safest bet you can make.
I mean, this timeline says it all, doesn't it? Every single dip you see on there was a moment of sheer panic. A recession, a war, a pandemic. Just think about the 2008 financial crisis. It felt like the world was ending, and the market absolutely plunged. But for the people who just held on, the S&P 500 didn't just recover, it soared to brand new heights. The short-term noise is always terrifying, but that long-term trend is undeniable.
And that incredible resilience really delivers. We're talking about an average return of around 10 to 11% a year, stretching back for nearly a century. That's the fuel. That is the engine that took that initial 10 grand and, through that power of compounding we talked about, transformed it into that life-changing $2 million.
So that's the past. But what about right now? Why, in a world that's full of crypto hype and meme stocks, is this old-school index still breaking records? Let's take a look at what's driving its success today.
This really gets to the heart of 2 completely different mindsets. On one side, you have the total emotional roller coaster of chasing hype, jumping on the latest trend, panic selling when there's bad news. It's exhausting and, frankly, it's often disastrous. Then, on the other side, you have this strategy. It's calm, it's disciplined, it replaces that short-term panic with long-term patience.
And you know what? That patient approach is winning. A huge part of the recent surge has been driven by the sheer dominance of tech giants like Apple, Microsoft, and NVIDIA. You might have heard them called the Magnificent Seven. But it's not just a tech story. We're seeing real strength across the board in financials and industrials, and it's all being fueled by solid company earnings and a consumer who somehow just keeps on spending.
So, what's the future look like? Well, a lot of experts are incredibly bullish. They see these massive game changers on the horizon, things like huge productivity boosts from AI and a major expansion in green energy. If you add in continued tech leadership and the eventual stabilization of interest rates, the next decade looks like it's poised for even more growth.
So after all that, the history, the mechanics, the future outlook, what's the one big takeaway here? What's the central lesson of the entire S&P 500 story?
Well, let's just be honest with each other. Investing in the S&P 500 is not exciting. It is not going to give you that lottery ticket thrill of a stock doubling overnight. It's really the opposite of a get-rich-quick scheme. In fact, it's kind of boring.
And that boring quality, that's its superpower. Its predictability is exactly what makes it so incredibly powerful. Its strength isn't in flash and hype, it's in its relentless, steady, proven ability to turn time and patience into real wealth.
This is a strategy that fundamentally rewards patience over panic. It rewards discipline over drama. You could argue it's the clearest and most proven path for building long-term wealth that exists.
So it all leaves us with a question to ask ourselves. Is your financial strategy built on that steady, solid foundation of patience, or is it getting tossed around by the daily waves of panic and hype? The choice, of course, is yours. But as the S&P 500 has shown for a century, when it comes to building wealth, patience isn't just a virtue, it's a superpower.